one advantage to being sector focused is that you definitely have a pretty, high rate of pattern matching in terms of seeing, being very familiar with different sub-verticals within financial services and starting to develop a good nose for, what is compelling and truly industry changing versus, the 10th version of a business you've seen before.
Welcome to She Invests. Join us every week for conversations focused on the growing number of female angel investors, the real unicorns. You'll hear from existing female angel investors, VCs, and fund managers on their investment thesis. From deal flow to exits, they will share the best practices that contribute to their success. Female angel investors will be equipped with the tools and resources to confidently activate their capital in order to make an impact in their community and the global economy. With your host, active angel investor and founder of Hera Angels, Dr. Sylvia Ma.
It is my pleasure to have Colleen Poynton as part of the She Invest podcast. Colleen is the Vice President at Core Innovation Capital, where she sources and/or executes investments across several focus areas, including enterprise banking infrastructure, insurtech, small commercial credit, SMB benefits, and consumer credit. These investments are generally in companies that make financial services more efficient, affordable, accessible, and secure for individuals and businesses. We're also fellow 37 Angels colleagues, where I have experienced her utmost passion for entrepreneurship and her incredible intellect in thoroughly thinking through the user experience for startups and give brilliant agile solutions for scaling. Prior to joining Core, Colleen worked on the sourcing and selection team at Endeavor Global and helped launch and scale the commercial real estate startup IIC as the first employee. She began her career in urban development with a Chicago-based CDFI, or Community Development Financial Institution, where she worked to bring high-quality financial products to unbanked customers. Colleen also holds an MBA from Columbia Business School and graduated magna cum laude from Princeton University. What a pleasure to have you on the She Invest podcast.
Thanks for having me.
I just love that we were able to connect through Angela Lee, who heads up 37 Angels, and wanted to kind of start there. How did you get involved with 37 Angels in the very beginning?
So I connected with Angela back when I was living in New York City, and I was getting my master's degree at the time at Columbia. And I was pretty active in the entrepreneurial community at Columbia, and actually was introduced to Angela through a classmate of mine who was also an entrepreneur and was also sort of kicking around business ideas and workshopping a few companies. And she had met with Angela, I think, right as 37 Angels was getting off the ground. And so, I got introduced to Angela probably less than a year into the formation of 37 Angels. Really liked her, definitely was interested in the vision of kind of building a community of female investors and just building kind of another angel network in New York City at that time. So I decided to jump on and participate, and I worked with them on a bunch of deals for the duration of my time at Columbia.
And how was that system brought to you? Because I thought 37 Angels is a boot camp, and a boot camp for female angel investors, which I absolutely adored. And so how did that walk you through how to become an angel investor?
Yeah, so it basically was, I think, a good sort of level setting for how to think about early stage investing. And just to back up a little bit. So as you mentioned in the intro, my background prior to going to Columbia, I was first employee at a startup, really sort of saw a business go from 0 to 1, from concept to revenue and having clients. And it was a wonderful experience, but we actually never took in outside capital. So it was entirely self-funded. And I was very interested in continuing on in operating. Actually, at that point in time, I thought I was going to go back into the operating side, ideally with a high growth company in New York. And I thought it would be extremely valuable for me to get perspective, investors' perspective at the early stage, understand how investors analyzed businesses. I thought it would make me more effective either in raising capital myself or just in operating at a very early stage business that inevitably would be raising venture capital. So that was sort of my motivation for getting involved. And then I would say that the program definitely delivered in terms of really just sort of first principles, thinking through how you evaluate an extremely early team, extremely early product, how you kind of run an effective diligence process, ask the right questions, and ultimately reach a decision around investing.
And that propelled you into your new role, as we talked earlier about really looking at the early stage fund and how do you go through new early stage startups and go through them and see if they are good investments. So walk us through how you came from 37 Angels and then now you're kind of managing a fund.
I'm not. So I'm a member of an investment team. So Core is an early stage fund. We invest predominantly at the seed and Series A. Typically our checks are 2 to 4 million initial. We lead rounds, we take board seats, so we're very, very involved. Seed stage, we're pretty flexible in check size, but typically we're writing seed checks in the order of 200 to 300,000. And it's an $80 million fund. So there are now 5 individuals on the investment team. We just brought on our 5th, which is exciting. The past 4 years, it's really been 3 and then 4 individuals. So pretty small investment team. And I am a vice president along with my wonderful colleague, Alex, and the founding partners are Arjan Schütte and Colleen Poynton. So that is our team. And in terms of, how did I sort of transition, right? Basically, how did I end up at this fund? So as I mentioned, I was actually focused on finding an exciting operating role in New York when I bumped into the founding partner of the fund, Arjan, and Core was actually started in New York City. So the first fund was capitalized in late 2010, early 2011. I bumped into Arjan in the winter of 2012. He had been at it for about a year. And I was extremely taken by his thesis. It really resonated with me given what I had done in the first part of my career. I thought it was differentiated. I thought it was well timed. And we basically struck up a conversation and he suggested that I apply to work with them for a summer, which I did, and I learned that I just loved the experience of investing. Got to work on 3 really interesting deals, and ultimately, had an opportunity to join full time upon graduation. So decided to take the jump and move over to the investing side. So that was sort of how the transition occurred. And happy to talk more about Core, about our thesis, about how I think about early stage companies.
I love that. So that was actually my next question. So I love how that investment thesis of the founder brought you together. And I find that a lot with even syndication between angels is that investment thesis of one angel brings others together so you can syndicate better. And in your position at Core, you were brought in because of that thought process of the investment thesis. So let's dive into that.
Sure.
At Core, what is the investment thesis and what do you guys hold dear?
Yeah, absolutely. So we want to invest in companies, specifically companies in financial services and financial technology, where we see a very strong alignment between technology-driven competitive advantage and end-user value creation. So practically what that means is we want to see companies that drive significant transactional savings, earnings enhancement, income optimization, greater transparency, greater accessibility. And the thesis there is simply that the companies which create the most value for their users, especially in financial services, are going to build the most resilient, sticky, and ultimately valuable relationship with the customer. And that translates into superior lifetime value and ultimately better enterprise value for the company and better returns for us. So that's sort of how we think about alignment. And the origin of Core really, so when I first connected with the fund, the origin was really focusing on kind of underserved markets here in the United States. So Americans that float in and and out of the traditional financial system. Maybe they oversample on what we call alternative financial services, such as payday, pawn, check cashing. This is a massive industry. It's over 80 million Americans. It's over $100 billion a year fee sector, and it's fairly antiquated from a technology perspective. And so if you look at that, through the lens of an investor, big market, pretty low bar in terms of product quality, very little in the way of innovation, it starts to look like this is a really interesting place to seek out like visionary, capable entrepreneurs who are going to bring best-in-class technology to that sector. So that was really the thesis, and it resonated strongly with me, partially because, as I mentioned, first part of my career, I started in urban development with CDFI on the west side of Chicago, and moved out there actually thinking I was going to be very involved in kind of commercial investment activities, so distressed property purchase and rehabilitation. And actually got much more involved on the retail financial services side of business. And it was my first major exposure to what I would call an unbanked market, and really opened my eyes to both the level of customer demand, the opportunity, and the extremely poor quality of existing product and services available to that customer. So ultimately, I moved on after spending some time there and having a really fantastic experience, joined a startup, wanted something more fast-paced, but I think that market insight and opportunity really stuck with me. And so, when I did meet Arjan, the opportunity resonated, and I thought his thesis was, as I said, quite differentiated and extremely well-timed in the market.
And then how did you guys bring together that group of leaders for CORE?
Let's see. So Kathleen Utech joined as a partner. She joined as a venture partner in the first fund around the same time, actually, that I came on full time, and then rose to full partner in our second fund. And her background, she had been previously running a seed stage fund for Comcast Ventures. Prior to that, had also had an operating role running an online/offline e-commerce company, and had met Arjan in New York when she was on the investing side. And I think they actually had worked together very briefly in the very early days of him getting the fund off the ground. She stepped away and did several years, as I mentioned, kind of running a seed fund with Comcast. And then when there was an opportunity to kind of come back in a partner role for the second fund, she jumped over. So that was the origin of that relationship. And then my colleague Alex, who's fantastic, we've met through also kind of mutual contacts in the investing community in New York City. He was referred to us via a fund that he was working with at the time, really excellent early stage New York seed fund. He's also an alumni of Columbia, so we had that going. I think really, really resonated. He also sort of had a personal connection to the market, and I think was very interested in the thesis, and has been a wonderful addition to the team. In general, I think network is very important in bringing the right people together. I think, good people lead you to good people. And we've just seen time and time again that, some of our best referrals, whether that is on the team side or on the CEO and entrepreneur side, really come through, trusted intermediaries and trusted relationships.
I agree with that. I think relationship building is incredibly important in the angel and, of course, the fund arena. What have been the biggest challenges and successes in raising a fund? Because we bring this up in a lot of the Angel Capital Association meetings of, okay, angel investors doing great job. How do we transition that investment dollar to, let's say, a bigger fund to help that pipeline along? So, and then we were challenged, say, okay, everybody needs to raise a fund. Well, there's challenges around that. So Can you speak a little bit about that? Because I know you were not, let's say, doing it 100%, but part of that raising of that fund.
Sure. So the question is sort of what are the challenges in raising an institutional fund?
Exactly.
Yeah. I think it's a difficult process, especially if you're raising a first-time fund, because understandably, investors, limited partners, investors in your fund want to see track record. So, if you've been a very successful angel, if you've been angel investing, personally for, 5 or 6 years, and you've actually have a few companies that you can point to that have sort of, progressed raised follow-on rounds, maybe even been acquired or exited. I think that puts you in a better position to raise because you have a track record that LPs can look to. If you don't have that, it is difficult, and I think you need to make a really strong case about why you have an unfair competitive advantage in a specific sector, market, region, whatever your thesis is, whatever you want to invest in, you need to make a very compelling case to institutional investors as to why, you will have an advantage in identifying, sourcing and closing those deals. And it is extremely competitive. Early stage investing is competitive. It is only getting more competitive as more and more funds are capitalized. And so I think being very thoughtful and very honest with yourself about what your strengths are and whether or not you have some unique asset or insight or network that will allow you to have an unfair competitive advantage. I think that's very important because, if you really can't put together a compelling narrative there, I think it's going to be very difficult to raise. And if you do raise, you'll find it will be very difficult to compete and ultimately, get into the best deals. So I think those are some of the biggest challenges.
That's amazing. I love that. And it is getting a lot more competitive in that early stage round out there. I had another question is also about what would you say to a woman who wants to get into this arena and they're saying, how do I get in? How do I get myself known? How do I meet the right people? What would you tell your younger self to do to get you to where you are right now?
Oh man. I feel like a lot of people in this industry come to it from very different paths, but I think the common thread is a passion for and involvement in building businesses. So typically, what that looks like is some level, a pretty good level of involvement in the early stage tech ecosystem. Usually, that's from an operating capacity. But I think if this is an area, if you're excited about it, investing, I think it's very important to be really intimately plugged in with the industry in which you will invest. And the best way to do that, I always think is sort of like to be in the trenches operating, or to be very kind of actively, maybe there's another path, right? Maybe you have a really specific skill set that is valuable to early stage companies. Maybe you're consulting around some specific aspect of operations, whether that's, engineering or product or marketing or just finance and ops. And maybe that's kind of your pathway to really getting plugged in and networked. But I think that is ultimately the best way, is just be a participating member of that community, be adding value, be contributing to building businesses on the operating side, prior to making the jump to being an investor.
And then making that jump to investor, I know it's a hard jump to take sometimes. What would you tell that person, saying, think about these couple of things to say, yes, go for it, or hold off, let's do a little bit more due diligence in networking with people, or doing more operations work, or doing more consulting?
Yeah, I mean, again, it's sort of hard because this is so idiosyncratic by person, right? So I could probably give 10 different answers to 10 different profiles, based on what someone has been doing in their professional life. So I don't know if there's a one size fits all answer. I think the most important thing is to be honest with yourself about what you can bring, and if you're unsure if it's the right time, if you're unsure about whether you want to begin to allocate some of your own personal capital to investing, have some candid conversations, reach out to people in the industry for coffee, just to get advice. And, what I think you'll find is that people are generally pretty open, especially if you come with good intent and you even find a way to sort of add value to that person. Maybe it's sourcing a deal for them. Maybe it's, offering up a connection that you think would be useful to them. I think you'll find that people are pretty open and happy to get a 30-minute coffee and just be sounding boards. So I would definitely practically, I would recommend individuals who are considering this to proactively identify investors in their community who maybe are investing in the kinds of businesses that they would like to be investing in, and then just sit down and have a candid conversation about whether it's the right next step for you.
So in that right next step, I know that you have so many deals come through your desk. So how do you decide on going, let's say, through a soft due diligence to start your process at Core? Can you walk us through that a little bit?
Yeah, so basically, how do you sort of make that initial cut?
Exactly.
Yeah, so I think one advantage to being sector focused is that you definitely have a pretty high rate of pattern matching in terms of seeing being very familiar with different subverticals within financial services and starting to develop a good nose for what is compelling and truly industry changing versus the 10th version of a business you've seen before, right? Like another iteration on a similar idea. So I think the first cut is sort of like on a quick scan of the deck, is this truly differentiated, interesting, unique, and has the potential to be big, or is it an iteration on the same theme that we've seen before? I think team is extremely important. So usually the first thing that I would do if I get kind of a blind intro is scroll to the team page and look at who's behind it. And look at what they were doing before, scope them out on LinkedIn, see if they have the kinds of insight and experience that I think would be appropriate to build that business. So that weighs in heavily. And so if the team sort of checks out and seems compelling, usually I will have a conversation, even if the business doesn't immediately manifest to me as compelling, because sometimes you just need to hear it from the founder's mouth. And on the other side of that coin, sometimes you come across businesses with a young team that doesn't have a bulletproof, resume, but they've stumbled onto something extremely insightful and interesting that, has potential to be a very large business. And in those cases, again, definitely take the call and see if, this is a team that has the capacity to grow and mature with the business. So, I think those are a few of the general things that we look for. Obviously, there's a lot of specifics just in terms of traction, in terms of unit economics. So, for example, if we're evaluating a company in the Series A, typically I want to see something that is for sure post-revenue, in market. Ideally is kind of in the zip code of $1 million ARR, close to that or a little north of that. And a strong sense of sort of momentum around growth. In the seed, it tends to be more heavily biased on the quality of the team and the scope of the market opportunity, simply because in the seed, more common that you have a pre-market, potentially even pre-product business.
And in that really seed stage teams, how do you mentor the teams at Core? Because that's really important. I loved how you said, okay, there's some teams that are pretty early stage and they might not be as compelling, but they have an amazing idea. How do you walk them through growing personally or as a team growing?
So I think I want to just be careful to draw an important distinction. I think there are teams that are compelling on paper, and then there are teams that may not have, as I said, sort of the bulletproof resume of a bunch of logos and 2 decades of operating, success behind them. Maybe they're 26 or 27 and this is kind of their first rodeo. But I think it's extremely important, regardless of that, when you sit down and have a conversation, you need to walk away extremely impressed. You need to have a very high bar and need to feel like the individuals in front of you, they're unproven, that they are sort of insightful and mature and self-aware beyond their years. And you need to see in them the capacity to grow with the business and potentially be long-term CEOs, CTOs. I'm strongly biased against investing where you feel like, okay, this is a great business, but we're going to have to replace the CEO in 2 years. Like, that is not a good idea. I would strongly discourage anyone from, if you're considering an investment because you think it's a wonderful business, but you really have a bad instinct about the team, or you just find some, a key member of the team underwhelming, I wouldn't lean in, because, changing that early in a business's growth, changing out the CEO or the CTO is pretty disruptive. And so you want to avoid it at all costs.
Well, I love that thought process, because we do hear from other angels that the CEO is not capable or something like that, and let's replace them. So I love that thought process, because I feel the same way. I want to grow the team that started it, because that disruption of changing that is going to be more detrimental to the success of that startup.
Yeah, I think like a good metric I always use, I encourage everyone to do this, and I think it doesn't matter where you are in life or career, or, if you're just starting out or you're a partner of a firm. I think, I often sort of use the mental exercise of, is this someone that I would work for? Is this someone that I have enough conviction in terms of their intelligence, their insight, their ability to learn, their ability to take criticism, their ability to lead? Like, do they impress me enough that I would contemplate, leaving my current job and going and working for them? And that's an extremely high bar. And when you start thinking about it in those terms, you will quickly find that, the answer is very often no. And so, yeah, I find that to be a very useful thought process.
Yeah, that litmus test is really great. I love that, because then you're saying, okay, will I be able to communicate with them also? Because that's important with the mentoring of that team. You need to communicate and grow them and have them be,
absolutely,
introspective of what you guys are talking to them about.
Yeah, and so to your question around mentorship, I mean, I think, this gets down to sort of key characteristics to source for, right? But ability to be self-aware and absorb feedback is extremely important. You need people who are hungry for growth, no matter where they are in their career. They could have already exited 2 companies. And I think if they approach company number 3 with a predisposition that they sort of know how it's done and they're just going to run a certain playbook, they will make mistakes and there will be blind spots. And so I think you need someone who's always self-aware, who's always willing to admit that they don't have the perfect answer 100% of the time, and they're always kind of hungry to grow and figure it out, because that's the profile of a leader who is going to be kind of someone who will collaborate with the board, and who will be a great partner over what is a very long journey in building a company. In terms of sort of how we think about mentoring like CEOs, I think we just try to be open books, right? We're available, basically 24/7, 365. I think if the CEO texts me, at 11 a.m. on a Sunday and asks if I can chat, like, absolutely, right? Like, I think it's just extremely important that you're always there, and that you can be a neutral sounding board and give them a little bit of perspective, because they are so in the weeds of building their company. Sometimes they just need a sounding board that sits at a slightly higher, 30,000 foot view, can kind of help them zoom out on a problem, talk through a problem, and be a neutral sounding board. So I think the short answer is that we're there whenever our companies need us, and if they are looking to be connected to specific expertise or specific resources, we do everything in our power to facilitate that.
I absolutely love that, because that's kind of how I am too. Okay, let's talk about it. What are your challenges, and walk through that. What type of typical perspective do you give startups? Again, that's the caveat of that we've talked about, is that a lot of startups are as varied as the hues of a rainbow. But what is the typical things that you're walking them through as early stage startups?
In terms of advice, or
yeah, you're saying you give them perspective and advice. So what is a typical advice that you're giving them? Because as an angel investor, sometimes we're thinking, well, what can we give them? And I know that there's a huge variety, but what is the typical things that you talk about?
I think there's some fundamental questions that any good investor should just ask about a business model, right? That kind of hopefully the CEO has thought about it and is thinking about it, sometimes asking very basic questions about scalability, about unit economics, about defensibility long-term, about, exit potential, just very sort of basic questions. I think in terms of the perspective, again, it's a difficult question to answer, because it companies are there are a million snowflakes, right? Every company is a snowflake.
Exactly.
But I think something in general that I can provide is a perspective on what's going on in their industry, because it's quite likely that I've spoken to every company that is either competitive to them directly or indirectly, or potentially moving into that space. And so I have sort of a bird's eye view of the field that they're playing on, in a way that often a CEO is sort of in the trenches building. They might not have that bird's eye view, and ergo they're vulnerable to sort of blind spots. So I think that's extremely valuable input. And we, obviously you have to be extremely careful as an investor never to sort of share back something that would be confidential from another company's perspective. But making them aware of businesses that are extremely competitive to them, or potentially put their growth plans at risk, or maybe will make it more difficult for them to fundraise in the future. There's a lot of fundraising dynamics that you have to be sensitive to, and if there's 3 direct competitors in your space that have already raised a Series B and Series C from notable, venture capital firms, it will not be easy for that business to go out and raise a Series A unless they are just somehow dramatically different. Those kinds of macro perspectives can be provided uniformly to businesses, no matter what the sector is, within financial services, again, because we're such a focused fund.
You brought up fundraising. So do you guys do follow-on investing? And then if yes or no, and then how do you help them fundraise that next level?
Yeah, so absolutely. We reserve about 60% of our capital for follow-on in the Series A. And in terms of raising the next round, obviously, as an investor, one of your most important assets is your network, and that's, that is inclusive of your network of other investors. And so clearly, we should know better than anyone who the top 5 firms would be for any of our given businesses. So, what are the interests of those firms? What are the specialties of the partners? How does that map to the critical needs of the company? What is the right kind of profile of fund in terms of size and capital appetite and deployment ability and multi-stage ability versus single-stage ability, right? There's a lot of considerations, and we have a deep network with a wide array of investors. And so again, absolutely, we will make strategic introductions to the firms that we think could be the best fit.
And I think that's a great asset of a fund, that it focuses on a specific sector so that you can have all the connections that startup needs in that industry.
Yeah. And I think, there are plenty of generalist funds that do this very well also. I think, it's not, that element of the business is not specific to being sector focused. I think we probably have an added awareness of who the right partners would be at generalist funds for one of our companies to go talk to, right? Who is the partner at, pick your Silicon Valley fund that happens to have an interest and appetite in insurtech, right? Is it so we can make sure that a company isn't knocking on the wrong door? But yeah, I think that any fund that's sort of worth its salt is, should have those relationships and should be able to deliver that at a base minimum for their companies.
What are the roles or do you have the role of having an accelerator that kind of feeds that pipeline a little bit? I find that funds also work with accelerators and also angels and other funds. So how does that play in that ecosystem?
Yeah, I wouldn't say it's a huge source of deal flow for us, but we definitely have relationships with a few early stage accelerators, and mostly it's a nice way to sort of give back and mentor really early stage entrepreneurs. So we are involved with a few great kind of FinTech centric accelerators. One is the Financial Solutions Lab, which is a partnership between the Center for Financial Services Innovation and JPMorgan Chase. We also have a great relationship with a group called Village Capital, a great group that's backed by the likes of PayPal, and they have sector-specific accelerators, and FinTech is one of their verticals, and we're mentors in that program. I think net in terms of our pipeline, accelerators are a very small portion of deal flow, but I think it's just a really good way to sort of be involved in the community.
And what are the other pipelines? We talked about network and all of that. we're going now backwards a little bit, but what is that pipeline coming into your desk? Who's coming in? How do you source those startups?
Yeah, really, again, network. Sorry to
that's what it is. I mean,
beat the drum on that. But look, I mean, I think we get deals from all kinds of sources, right? And I've gotten intros to incredible deals from speaking on panels and meeting someone who then connected me to someone who then introed me to a great CEO, right? So it can come from sort of being out there in the community. I've gotten deals through as a function of writing about sector interests in blogs and having people proactively reach out via social media. Have stumbled across things just in the process of doing research that looked really interesting. But I think net, the most important, i.e. like highest volume and highest quality, is coming from relationships with other investors, industry experts, operators potentially at larger companies who know people that are spinning out and starting something new. But it really does come down to just your Rolodex of colleagues.
That's kind of how I source my deals as well, as a network is so important in every aspect, from sourcing and also on the way out as well.
Definitely.
So there's anything else in our final little minutes together is about Core or about your personal investment thesis that you would like to talk about?
Something that I really like to think about in the context of looking at a business that we probably haven't spent as much time discussing is, first of all, just like how important a company is to its user. So when I think about this in the context of enterprise, I typically think, is this a top 3 problem for a CEO or a major decision maker at a company? Because if it's not a top 3 problem, you're facing an endless and painful sales cycle. For consumers businesses, I'm interested in finding things that I think are existential to people's lives, that meaningfully improve someone's day-to-day. And there's good businesses out there that maybe don't fit that bucket, but I happen to be particularly interested in companies that I think are really existential to someone's quality of life. And then, more tactically, I think it's very important to consider kind of phases of competitive advantage in a business and how they evolve over time. So the way I sort of think about that is, what is your near-term advantage that gives you a wedge into the market? What are you doing differently or better that gets you in the door? And once you're in the door, what preserves that advantage? What is the kind of network effect that is created? How do you become extremely sticky and embedded with your user? And how do you grow that advantage over your competitor over time? Because that is really how you build enterprise value. And so I think that's an extremely important quality to look for in businesses that you're evaluating. Yeah, and then obviously, you have to think long-term about what the likely exit outcome is. Most companies do not IPO, and so you really need to think about what is the universe of likely acquirers that would find this business highly attractive or synergistic in some way. So yeah, those are a few critical things that we haven't really touched on yet.
Touch on a little bit more, because I love the FinTech exit strategy. So since a lot of companies are not going IPO, what have you seen, or what are the trends that are in the FinTech industry?
Yeah, I mean, I think there's a lot of pretty well-known acquirers in financial services. There's a bunch of large incumbent technology companies that sell software to banks, to carriers. There's a lot of sort of large data and informatics businesses. So in financial services, some names that come up often are entities like FIS and Fiserv. Data informatics companies like Intuit. Increasingly, there's sort of large tech companies that are, fintech companies that were founded over, well over a decade ago. At this point, are very large, very mature, and becoming more acquisitive. So an example of that would be a business like PayPal. And, I think it'll be interesting to see moving forward the extent to which kind of larger technology companies that historically have not been active in financial services actually become acquirers in the space. So, to what extent would Facebook, Amazon, or Google become an active acquirer in the space? We haven't seen a ton of that yet, if you look at what's happening in international markets, especially China, in terms of how some large tech platforms are becoming increasingly heterogeneous in terms of the industries that they support. Financial services has become embedded in a lot of large social platforms. So could we see something analogous happen here in the United States? Potentially. So, I think it'll be interesting to see how that plays out. But historically, there have been very large, kind of well-defined technology businesses that are active acquirers in FinTech.
Love that. So in our final time together, I wanted to end with my rapid final 4 questions. They're not hard. So the first one is, what's your favorite angel investing resource?
Network. Sorry.
No, that's what it is. We talk how it is. So
yeah, definitely.
That's awesome.
Just the people that I know and trust.
Love it. What's your favorite book?
I would say The Death and Life of Great American Cities, Jane Jacobs. It's a great book.
Love it. Love it. Going back to your original, where you started off with. That's awesome. Number 3 is, who has been a major influence in your life?
My mom.
Me too. It goes across the board for many women.
Yeah.
What does abundance mindset mean to you?
Always seeing possibility.
I love that, especially the possibility of your network, right? And how that plays out. I think that's really, really important. So thank you so much, Colleen, for being part of the She Invest podcast. I loved having you part of it. Loved hearing more about what you're doing and what CORE is all about. So thank you so much for your time and your treasure of your network and your information.
No problem. Thank you again for having me.
What a fascinating and deep discussion we just had with Colleen Poynton. As a sourcing and selection guru of the highest degree, we dove into what are the top criteria she looks for in early stage startups. Colleen shared that they are, number 1, is the idea big enough? Number 2, has she seen it before? Number 3, is the idea sufficiently differentiated? And finally, number 4, is the team appropriate to build the business? Especially, are the credentials and passion of the team compelling enough for investment? The last 2 things we talked about is really how she encourages investors and VCs to look at startup deals. One is, ask yourself, is this someone that I would personally work for? And secondly, wanted to encourage investors that the most important asset as an investor is your network. So build it before you need it, because we don't know everything. We don't know everything that we need to give and mentor to the startups that we have in our portfolio. So the more we have a network, the more we can go out and source the information and connections that we need to make our portfolio companies thrive. So thank you so much, Colleen, for being on the show, and hope everybody enjoys it.
Thank you for listening to and subscribing to the She Invest podcast. Go on over to sheinvest.com for the full show notes for this episode, as well as any resources, websites, and opportunities mentioned during the show. Sign up for the sheinvest.com newsletter to learn about events like our annual Hera Venture Summit during the month of September and our She Invests monthly investor circles. Thank you for your time, talent, and treasure.